Well, it's education time where we investigate a topic which will be helpful to new traders. This week we're taking a look at technical aspect of trading and taking a look at candlestick patterns. So Mark, tell us about what candlesticks tell us on and how they can be useful for traders.
Well, first of all, candlesticks go back to the 18th century, invented by the Japanese to kind of keep track of rice and kind of underlying commodity prices.
Is that where it came from?
Yeah.
Japanese rice, how about that?
Bit of a striker, but the guy who actually undertook to and discovered it ended up making a lot of money in relative terms or whatever. But the key thing is that it's each candlestick as such, you can see it looks like a candlestick, is pretty obvious, is a closed kind of time period. And over that time period, the underlying asset has made a high, a high, a low, and has opened and closed. So basically the share traded in this kind of range, opened here, closed here, and then finished. And then over the consecutive time periods, you end up with a kind of series, which is more or less independent of time as such, other than the criteria you have here. And then over the years, set formats and patterns have become established. Nearly 300 years of kind of pattern recognition now. And some of them are fairly consistent and fairly well used, yeah.
So run us through some of these, because I love the names that we have in technical analysis. It almost sounds like, names that you'd use on date night, like shooting stars and inside candle, etc.
Yeah, hammer's a bit dangerous now. Okay, but bullish candle has a lighter color and indicates that the market went from basically from there to there, bearish from there to there. Doji, everything is kind of passed out equally. All the other patterns manifest in kind of sequence. So there's been one period of activity and another. And that usually indicates that there's about to be some kind of change in the trend from the level we're at now. And the simplest kind of example is this one, where the successive candle has they call it engulfing because the bullish range is more than the bearish range. And that's indicative of buyers maybe beginning to come in. So at its simplest level, these various signals are taken as kind of first kickers that something's about to change, and then confirmations are sought. And over hundreds of years, these patterns have become kind of recognized as the basis of some kind of reasonable chance of having a follow-through.
And these then get rendered in charts sometimes, where these are daily, for example. That's the one you see most often. But you're saying that someone who's an experienced chart reader would be able to look at this and immediately discern a lot of information at a glance.
Yeah, I mean, look, short term, then they're not so useful. Hourlies will kind of work. Dailies is what they're originally kind of designed for. But yeah, you get an idea from looking at them what the activity has been in the last 3, 4, 5 hours. With a lot of ease, where the market is truly sitting.
Tell us about the morning star reversal and the evening star reversal there.
Well, I mean, basically, it's been given this is a change of the original Japanese, the Japanese name. When these formations come along, it's indicative of some kind of change about to take place in the original direction. You've got to know the kind of trend going in and the trend going out. And the star comes from the doji. When the market at this stage has reached equilibrium and kind of held price for whatever time period this is. So the buyers have matched the sellers, and then there's been a successive action. And because the formation looks in a certain way, a Japanese name has been attributed to it.
Okay, but now with respect, I mean, this looks a little bit old-fashioned to me. I mean, with respect to the Japanese, people who are using computers to do algorithm-based trading may have incorporated some of this stuff. But I mean, who sits and looks at printed out pieces of paper with a microscope anymore these days?
Probably 50 million Japanese housewives. It's the lady at the Japanese house is the one who makes a decision, and these are things that have been.
What's his name? Mrs. Nakamura.
Wasabi. So look, it's again, you're right. I mean, on algos, you can basically simulate the same kind of things, and it's another one of those things that we use in confirmation with other kind of areas. So if you see something interesting or an interesting formation, check the previous things we've discussed, the stochastics, where the actual curve is, where the moving averages are, and you get more of a case for maybe some kind of sea change or some small change about to take place.
And Sam, there's an article which has been written about this topic by Garth McKenzie of Traders Corner, which is going to get posted out to everybody who's subscribed this afternoon on the followhotstocks.com list. So that's what you get. You get the daily trades with a little video clip, you get this educational supplement, and then also the report about the profit tracker that we'll talk about later.